Welcome, everybody. My name is Jason Richardson. I am the Director of Research for the National Community Reinvestment Coalition. Today, we're going to be going through a walkthrough of a new tool that we're offering to NCRC members called the Fair Lending Tool. Following that, we're going to have a discussion with a couple of excellent speakers who have agreed to join us. Kenneth Begos, the Executive Director of the Affordable Housing Centers of Pennsylvania, and Rashmi Rangan, the Executive Director of the Delaware Community Reinvestment Action Council. Right now, I'm going to start playing a video of the walkthrough. It's about 20 minutes, and it's going to go through our new tool and a lot of its features. And then we're going to come back here and answer any questions, and then we're going to have a discussion about this tool and how your organization might use it. If you want to ask a question, at the bottom of your screen, there's a little Q&A window. Please open that up and put a question in. You feel free to put a question in the chat as well. I'll try to keep up with both of those. Unless there's anything else from our speakers, let's go ahead and play the video. Thanks for joining us today. We're going to take a walk through the new Fair Lending tool. This is a member benefit offered to NCRC members. And you're going to start from the member hub once you sign into our website. It'll look just like it does above. Scroll down. And on the left-hand side under Member Tools is the 2021 Fair Lending Tool. When the screen opens, it'll look like this. Before we get started, I want to point out the definition button. If you click on this, it'll give you a list of a lot of the definitions, methods, and data sources that are used throughout the tool. If you have any questions about any of these, you can email me, or click on the web link here, and it opens a little form you can fill out to send us a question. Let's take a look at the tool. First, on this page, we're going to look and select the geography that we want to focus on today. And today, for this demonstration, we are going to look at the Philadelphia metro area. But we don't want to look at the entire metro area. So if we click on the county drop-down menu here, you see a list of all the counties in that metro. Let's go ahead and uncheck 1, 2, and 3. You can customize the geography you're looking at to match the area of operations that your organization works in, or the area that you're interested in specifically. Click on Next Page. Here at the table of contents, you see an image of all of the different pages that are part of this report. Also in the upper right-hand corner is a download button. You can click on the download button and export the entire report into a PowerPoint format. However, you're going to lose all of the interactive features that I'm going to talk about with you in a minute. So I'd recommend using this tool through the website, just like we're doing right now. Let's get started. We click on demographics. This takes us to a basic demographic page. It gives you the population, the number of neighborhoods or census tracts, median income, racial breakdown of the area, as well as the population of majority minority neighborhoods and low to moderate income neighborhoods within this geography. At the top are navigation buttons. The little house takes you back to the table of contents. Let's go on to the next screen. Next, we're looking at the mortgage overview. This gives us a look at the mortgage lending between 2018 and 2020. How many loans were made in this area? How many of them are home purchase or refinance loans? And then it gives you a breakdown of year over year, showing you how much lending was made for each loan purpose. If you hover over any of the data in this report or click on things, a lot of times it's going to show you additional data. Next, we're looking at lending in low to moderate income and majority minority neighborhoods specifically. And again, this gives you a demographic breakdown of the population in those areas a little bit, and it shows you the volume of lending by loan purpose. Next, we get to our first map. This is home purchase lending, but from 2018 to 2020 across the entire area that you've selected. You can zoom in and see more detail. Each dot represents one loan made within the census tract, but the dots themselves are randomly placed. So you're not going to be able to find somebody's address with this. The darker green colors indicate lower income. And you can click over on this button to look at the same map, but by neighborhood minority population. Again, darker blue colors indicate a higher minority population. And the maps are useful for letting you find clusters and lending deserts, and then also investigate those a little bit to see what may have caused them. In the center of the screen right now, you see an area with no lending. This could be a lending desert. Let's zoom in and see. It is probably not a lending desert. By zooming in and switching over to satellite photography, we can see that this is a large park area. So we wouldn't expect to see very many loans there. Next, we're going to take a look at the top mortgage lenders in the area. And this is also the first screen that's interactive. So let me show you how it works. On the left-hand side, we have a list of the top 20 mortgage lenders. We're looking at lenders by the number of loans they originated themselves and those loans that they purchased from other lenders. As you can see, some very big lenders actually don't do a lot of originations. They buy their loans from brokers or correspondent lenders or something like that. In this case, we're looking at all loans for all types of lenders. Let's narrow it down to just home purchase loans. And you'll note that the order is changed to show the top 20 lenders of home purchase loans only. Now, Wells Fargo is still in the lead substantially, but they're not the largest originator of home purchase loans. That looks like it's Trident Mortgage Company. Purchase loans often don't have information that we need to do analysis. They often do not have income or race ethnicity for the applicant. So largely in this report, we focus on loan originations. Let's take a look at the top originators. Here are the top mortgage originators in this area. And as I said, Trident Mortgage Company is the largest with 11,649 originations of home purchase loans in the 2018 to 2020 time period. This also shows a breakdown of how many of those loans were conventional and how many of them used FHA, VA, or RHS funding. Now we're looking at the top lenders by their performance. We're still looking at home purchase loans over here. And for right now, let's keep that the way it is. On the left side, we're looking at lending to low to moderate income borrowers or in low to moderate income neighborhoods. On the bottom is the percent of loans to those low to moderate income neighborhoods. And on the left is the percent of loans to low to moderate income borrowers. The circles represent individual lenders. The gray circles are mortgage companies. The blue circles are banks. Generally speaking, you want to be in the upper right-hand corner of these scatter plots. So this bank has done 44% of its home purchase loans to low to moderate income borrowers and 27% of its loans in low to moderate income neighborhoods. That's pretty good. You can look at the distribution of the rest of the loans when you have time. On the right side, we're looking at loans to minority borrowers on the left-hand side and loans into majority minority neighborhoods on the bottom. Now you can also use the filters up here to select a specific type of lender. So let's say we just want to look at the top 20 banks and how they performed. Here we are. Now you can look at just the top 20 banks. At the bottom are some quick stats from the demographics page to remind you of where the population is in this area. So for example, on the left-hand side, we know that 27% of families live in low to moderate income neighborhoods, and that 27% would be about right here. So the banks that are to the right of that are lending in the LMI neighborhoods to a much greater extent in some cases than the population actually lives there. And that's a good sign. Next, let's take a look at those top mortgage lenders and see how they do on lending to minority and low income borrowers. In this case, we're still looking at home purchase loans, and we're looking at the top 20 bank loan originators in the area. And this screen does a couple of things. It does give you the total number of home purchase originations. It gives you the number of those originations which lack demographic data. And then it gives you the amount made to each of the largest racial groups in the area. So the gray bar behind these figures indicates an average for this area as well. So it's really easy to see which lenders exceed the average in terms of loans to specific groups, and which ones exceed the average in terms of not collecting any demographic data. You can click on this button to switch over to the same chart, but looking at it by borrower income. And we're still looking at home purchases for the top banks. And here we go. You can see how many were made to middle income borrowers, moderate income, or low income borrowers. And we're still looking at home purchase lending. Here we're looking at the interest rate and closing costs from 2018 to 2020. Still looking at banks and home purchases. So let's take these filters off because we want to look at all home purchase loans, regardless of the type of lender. On the left side are the interest rates during that time period. These are the median interest rates for conventional and versus the government insured programs. And you'll note there's not a huge variation. However, on the right, we look at closing costs. These closing costs include the origination fee, lender credits, points and charges, and any other fees that are paid at the closing table for things like mortgage insurance or inspections, credit checks, things like that. They're all included in these figures. These are median numbers. What it's showing is that for home purchase lenders loans in the area, the median figure was $4,122 in closing fees. For FHA, you can see that that's substantially higher. Generally speaking, closing costs on the government programs are higher, in part due to mortgage insurance requirements on FHA lending. Here we're looking at the impact of that. Government insured lending tends to be a little more expensive, but who uses this loan, these loan types? And we can see on the left-hand side that 60% of Black home buyers use FHA or VA lending for their home purchases. Almost 50% of Hispanic borrowers, 23% of whites, and less than 10% of Asians. The impact of that is seen in the scatter plot on the right. Black borrowers are paying a higher interest rate, although it's only slightly higher, remember, but their closing costs are much higher. So Black home buyers during this time period in this area paid $5,363 in closing costs, compared to white borrowers who paid $4,579 in closing costs. Furthermore, since 2018, HMDA has collected additional data on Hispanic, Asian, and Hawaiian or Pacific Islander borrowers. This additional data lets them identify themselves much more precisely. About 60% of those applicants choose to identify themselves with more precision. Here, I've broken down the same data that we just saw, but I've split it out so we can see the additional groups that have reported to HMDA. And you can see where Puerto Rican borrowers use government insured lending over 56% of the time, other Hispanic, which generally refers to South and Central American, about 40% of the time. Meanwhile, at the other end of the spectrum, while Asian borrowers typically don't use government insurance very much, specifically Asian, Indian, and Chinese borrowers, who are a large part of the Asian market, use it even less. And they pay commensurately less for closing cost and interest rates as well. And let's take a look at denial reasons. We're still on home purchase lending. This sheet is a little complicated, so I'm going to go through each section. Here we've got the total number of applications, denials, the overall denial rate, and the denial rate for white borrowers. And you're going to notice first off that there's usually a pretty decent gap there in the denial rates. If you look here on the left-hand side, the overall denial rate by race, here we are comparing the top racial groups that are in the area to white denial rates. And we find that Black borrowers are denied 2.4 times as often as white applicants. Hispanic applicants are denied 2.2 times as much. Asian, 1.8 times. If the ratio is 2 or more times higher than the white denial rate, I've put a little red check mark next to it, a little red triangle. So on the right, we look at the top lenders again. And you know what? Let's go ahead and limit this just to banks. Since we're talking about bank lending for CRA purposes in many cases, let's look at the top 20 banks here and see how their denial rates stack up. And you can see that across the board, most of the banks are denying Black applicants at least twice as often as they deny white applicants. Now, one thing I want to caution you about, when you hover over this and you see the pop-up, you'll note that one of the numbers here is the number of applications. Be cautious about lenders that have a very small number of applications for some of these groups. That means that their denial rate might be skewed a little bit just because there's such a small number of data points for it to go on. Next, let's take a look at business lending. Unlike mortgage lending, CRA reports business lending with far less detail than we get for mortgage lending, but we can still tell a few things. So on the left side, we see the total number of loans for the top lenders. American Express made the most business loans, followed by JP Morgan Chase. The blue bars indicate lenders that we've identified as credit card lenders. This means that nationally, their average loan is less than $25,000. The gray bars indicate lenders that make larger business loans. On the right side, we take a look at these lenders in terms of loans to businesses with less than $1 million of revenue on the bottom, which is how we measure whether or not it's a small business. And on the left-hand side, loans to businesses in low to moderate income neighborhoods. So just like the scatter plots from earlier, you can hover over individual circles here and see more information about their business lending. And we can map this data as well. So if we zoom in, you'll note there's often a very similar pattern to mortgage lending for business lending, but it depends on the metro area. Remember, the darker green areas are lower income. And if you click over here and look at the map by race, the darker blue areas have a higher minority population. Finally, we're going to take a look at bank branch locations. So bank branches are still important. Even though we see a decline in the number of branches in every community every year, they are still important for small business lending, as well as a place for people to go and ask questions about their account or start new accounts. One of the key reasons many people who are unbanked say that they do not use banks is that there are no branches convenient to them. In this area, Wells Fargo has the largest branch locations, the largest network of branch locations. If you hover over the bar here, it'll give you a little more detail on how many branches and how many deposits they have. The black circles at the end indicate the percent of the deposit market share. This is important. When mergers are announced, regulators take a close look at every location in the country where that bank operates, and they want to make sure that they're not growing too big in terms of the deposit market share. Here, Wells Fargo is just under 20% of the area's deposit market share. On the right side, we've taken a look at each of these branch networks and ranked them in terms of their percent of branches in minority neighborhoods at the bottom, and their percent of branches in LMI neighborhoods on the left-hand side. So by this time, you should be used to these scatter plots. If you hover over one of the circles, you're going to see some additional information pop up about how many branches they have and what neighborhoods they're located in. And then finally, there's an interactive map of those branch locations. And I realize there's a lot of branches here. So you want to zoom in and you can see a little more detail about specific neighborhoods, and you can scope out possible areas that are branch deserts and get a little more information about what's really under there. You can also look at these branches by race, just like the other maps. And if you want to focus on a specific branch or specific bank network, you can. So here we're going to type in Wells Fargo. And we know they have the largest branch in the area or branch network in the area. And this shows all of the Wells Fargo branch locations. And you can hover over each one for some additional detail. And with that, we're going to go back to the table of contents. And that's it. That's our video. Thank you very much. All right, so now we're going to shift gears a little bit. I want to go into a Q&A portion. There have been a few questions asked already, but if you have any questions, please put them in the Q&A box at the bottom of your screen. And Rashmi, Ken, and I are going to do our best to answer them and talk about the tool. So first, Rashmi and Ken, we spoke earlier, I think this week, and kind of went over this presentation and the tool. And I know in the time since then, you've had some chance to work with it. Understanding that I built most of it, feel free to tell me what you think of it and give me your thoughts after using it as a, you know, in specifically, I'm interested in how you think it would be useful in the work that you do.
And let me get started. Oh, I love this tool. Prior to access to this, I used to have to hound NCRC staff. I need this data, I need that data. Half the times I didn't even know what data I needed. And sometimes I would say, this is what I'm thinking about doing. What will be helpful? And then your research team would put things together and send it off to us. This gives power in our hands. And I am delighted about it. So I just wanted to say it's beautiful, it's wonderful, and I have tons to add. But before I do, Ken, your thoughts?
Yes, I would like to pick up on Rashmi's point of view as like this power in our hand. I would say basically it's like playing poker with the banks. We know what their hand is because of the fact that we know what their activity and what their involvement is. Because like I get a sense that like for the fact that with the Affordable Housing Centers of Pennsylvania, we were very much involved. There was a down payment grant program through the city of Philadelphia. I was keeping track of the lenders that participated in our program. We were able to see the fact that many of our Black applicants were going towards FHA mortgages more than, say, for example, in our case, it was like 79% versus like, say, for example, our white counterparts. So in some ways, it was conclusive in terms of our internal data was like supported, it is equivalent to NCRC's examination. At the same time, like particularly when it goes into who are lending in LMI neighborhoods, like it has a very much of a confirmation of the fact that the partners that we were working with, well, there's a reason why they are actively doing so, and the ones that we have had a struggle to build those relationships with, well, lo and behold, they are not doing well in terms of lending in LMI neighborhoods, like whether that is a priority or not. So, you know, and I would say in a way for us, we can utilize that as leverage to say, Bank A down the street is doing much better than you. So, and considering the fact that they're usually competitive by nature.
Yeah, so that's great. I'm really glad you guys found it to be useful. There are a couple of really great questions in the chat I want to address, and then we can get back. So again, if you have any questions, please click on the Q&A box at the bottom of your screen and enter those, either from myself or for either of the speakers. Beverly in New Jersey is asking, how narrowly can we target a geography? Can we target city data or only by county? Only by county is the answer. So if the city is and the reason for this is that the data is aggregated at the census tract level. So city boundaries often cross census tracts. It's just not possible with this tool at this time to narrow it down anymore. That said, if the city is a county, for example, Jacksonville, Baltimore, dozens of other cities are also counties, then yes. But that's the deciding factor there. Dexter Hall asked a couple of good questions here. The data source for data and methodology on the opening screen of the Fair Lending tool, there's a button that says definitions, and it has more detail on exactly what the data sources are. They are all public data sources. There was a question also on the source for the business banking. That is data released by the FFIEC that's collected under the Community Reinvestment Act. And it is, unfortunately, at this time, that's the best business lending data that we've got access to. NCRC is currently involved in a rulemaking for something called Section 1071 of the Dodd-Frank Act. And that will begin collecting business loan data that is similar to the mortgage data in this report. So we're very much involved in that discussion. Let me see here. Wally had some questions about Action Code 6, and that is deep into the pool on HMDA data there. So I'm going to explain a little bit. What Wally's talking about are loans that were purchased by lenders. And if we go back, in fact, I'm going to just share my screen here real quick and go, here's the tool. Let me see here. I just want to kind of look at the top mortgage lenders, and this is a national. I just don't have the filter set right now, but since you couldn't really see it great, I know earlier, I just want to show it to you. So we do look at the top lenders by both originated loans and purchased loans. So what Wally's talking about here are these purchased loans here and their distribution. This report does not really delve too much into purchased loans. About 75% of them in 2020 lacked any demographic data. It's very difficult to do a lot of analysis with them. So it just, they're not part of this. That's not to say we may not want to add it later, but for the time being, we mostly limit the analysis here to originations. Rashmi, can you give, I think the thing that I really took from both of you is that, and this is something we've discussed before, is that when you walk into a meeting with a bank or a lender as a community group, often you're at somewhat of a disadvantage there because they are well aware of their data. It's difficult, and it's become more difficult, I think, over the past few years, just because the data set's gotten so large and so complex that it's very difficult for the public to really understand these things or visualize them. We're trying to do something here where we build something that answers. So one thing Rashmi touched on, she said that she would contact NCRC and ask for data. We actually provide support to all 600 of our members where they can contact my team and ask questions, and we can try and help with data analysis and help you understand how to work with data. Part of the way we built this was I looked at all the questions that I got from members over the last several years, and I tried to build something that would answer a good number of them. And I think this tool does. And if I can help with that and cut out that middleman where you don't have to come directly to me, you can get some intelligence, you can download some data, and then we can still work with you on refining it more or looking at specific aspects of that data a little more precisely.
So, Jason, can I add a few things?
Please.
Why I felt and I said, this is power in my hands, accessing this tool. It is not just, as a nonprofit leader, we have so many hats that we wear. We write grants. We go out in the communities. We build partnerships. We talk to our banking partners as partners and also as advocates. So where I found this particular access to be so wonderful was in raising profile of an issue that was not getting the coverage. So accessing this data and the maps helps me talk to a reporter a little more intelligently, helps me talk to policymakers. This is what's happening. This is why we need CRA strengthened, or this is why we need more data points. And more importantly, I think in our sector, we are innovators. We look at problems and come up with creative solutions. One of the slides in the video that showed a data point, just the banks and banking deserts, is what allows us to think about how can we bring access to banks over there, or why it is so important to comment on a bank that is moving out of a neighborhood or a branch that is closing in a neighborhood. It helps us organize in every respect. But I also want to add, it's not just this tool alone that NCRC provides its members, it's all the training. So if I can use this data for advocacy, but I don't know how to advocate, I know nothing about CRA, you can provide training on that.
I think these tools are also just like can ask the questions to like the people in the room, is particularly like if, say, for example, the banks that you're looking at, say, how you like, we know what you're going, how you feel about that? Is that the best you're going to do? Are you going to do what is your, is this really a priority in your like in your effort in terms of your business models? It's particularly, especially when they come forward, and I'm looking at some that are like after multiple years of just not showing any activity. And when I look at for CRA activity, when I say I'll probably regard for like lending to lower moderate income areas, and now there's trying to put some investment, like certainly then it's like, all right, how much and what are your goals? What are your matrices? What is your definition? What are your definitions of success? And certainly, like, how much do what do you see our role as far as partnership in terms of achieving that goal? And certainly with that, okay, if you want to achieve that goal, all right, for a partnership, all right, there has to be a substantial investment into community organizations that can help you build that capacity.
So, you know, we alluded a couple of times, I mentioned that we do all support NCRC members here with research and data and analysis as well. And there's been a couple of good questions. Wally's really asked a couple of good questions in the Q&A box at the bottom of the screen about other technical designations and other ways of looking at the data. This tool is limited to certain ways of viewing the data, and it's focused more on originations of mortgages, small business loans, and bank branch locations. But we do have, I mean, we keep all of the data for the past 14 years of mortgage lending, the past 4 or 5 or 20 years of business lending, and more branch data than I know what to do with. So if you have other questions that this doesn't answer, let me know. The chances are pretty high that I can help with some of those questions. You know, Wally's asking about comparing a set of peers across the country based on the track designations of and to see who is underperforming. Yes, we can absolutely help with a request like that. Just shoot me an email and we can set up a time to talk separately. That may be something that this platform can't do, but it doesn't mean that we can't help our members get that information that they need. I was going to share again. I want to since especially since the video was so blurry, I wanted to share one of my favorite screens on here, which is the one looking at mortgage originations by race and income. And I think this is one of the handiest parts of the report. In the upper right-hand corner, and we're back in Philadelphia here. In the upper right-hand corner, I've selected home purchase loans by the top 20 banks. So here again, we see the list of the top 20 banks in terms of the number of originations they made on home purchases between 2018 and 2020. And to the right, we've got, excuse me, the demographic data for race, including those loans that lack demographic data, and then the largest of the other groups here. The nice thing is you can look down the list really easily and see which lenders are outperforming the market. These gray bars behind there are the average amount So anytime you see somebody poking their head up above that, it means that they're doing better than the average at lending to that community. So in this case, you see several high performers at lending home purchase loans, the share of their home purchase loans going to Black borrowers. And when you hover over the pop-up here, gives you a little more detail about the percentage and also how many originations that really is, because you don't want to look at a bank and think they're doing great when they only made 4 loans. So, and you know, if you here we're looking at Philadelphia, at a major city. If you were to look at a smaller community, it's not unusual to see some lenders at the bottom that didn't really make very many loans. But this lets you understand that a little bit better and see who's performing well. It also lets you see who is maybe not doing as well as we'd like to see it collecting demographic data. And then you can switch over to the income view and look at the same lenders, but here we're looking at the share of their loans going to middle income, moderate income, and low income neighborhoods, or I'm sorry, borrowers. And again, it's a really handy way of seeing how banks are stacking up against each other that I think would be very effective, you know, if you're going into a meeting and talking about community investment. Let me see here. We have a couple other questions. Tamara, a couple other people have asked us also, how often is the data refreshed? So HMDA data comes out annually in usually June or July, it depends. The past few years, they've been very good about doing it in June. Small business lending typically is released in December, and new branch location data is updated every August-ish, you know, depends. So we update them at that time. So right now, the mortgage data in this tool covers 2018 to 2020. Small business lending covers 2017 through 2019. And the branch locations are current as of June 2021. No, Faith, I'm not suggesting at all that we direct certain borrowers. What I'm suggesting is that this is an interesting tool, a useful tool to understand which banks are doing better at lending to specific groups. And it's a great way to start a conversation with them about how they can improve those figures.
I would also say for Faith, I mean, you could definitely look at that data to say who is performing well. You probably want to have those, if you haven't had those conversations with those particular lenders, that you should, that's an opportunity for you to do that.
Yeah. There's also a question in here about language access, and I think this is a great one because we do see in the data, and I don't spend a lot of time in this report, but since 2018, HMDA has collected disaggregated data on Hispanic, Asian, and Hawaiian or Pacific Islander borrowers. That has been really a kind of a watershed for mortgage analysis, because about 61% of the eligible borrowers choose to identify themselves more precisely. And it's really kind of opened a lot of interesting research paths that we can follow. The most interesting thing I've seen so far this year is that in the Asian community, you have Asian, Indian, and Chinese borrowers that are typically encountering the market very differently. And we had a question in the chat here about language access, and with Chinese clients going to only banks that have Chinese staff. We definitely see that there are several banks that are tightly interwoven with the Chinese community. They typically make a lot of those loans. And then even some of the larger banks market directly to that community. Asian Indians in particular over the last 3 years have really entered the market in a very big way, and are typically upper income and are getting a lot of the loan activity. So the point being that I would encourage you, if you're starting to work with mortgage data and you're interested in doing this kind of research for your organization, to understand the community and understand what the divisions are there. And then if this tool doesn't do what you need, let me know, and we can either update the tool. This is, we intend for this to be a responsive tool, a responsive process to members and their needs. So within the confines of the technology and the data, I can usually update it to answer the questions that we need to answer. Yeah, we have a question here about does the dashboard include any mortgage lending trend information on loan type, for example, home purchase and refinance loans? And yeah, I'm going to go ahead and share here. And Rashmi and Ken, just jump in if you have anything to add or any questions. I'm just kind of going to scooch over here to the mortgage overview. This looks back over the last 3 years. Whoops, we got to reset. Let me see here. So the filters that you set in the upper right-hand corner are persistent. That means as long as you go through the report, they're going to affect every screen you look at. So let's uncheck those. And let's go back to the mortgage overview. So I think your question was, can you look at how many, and this is a really interesting thing to stop on, and you couldn't see it earlier because of the blurriness in the video. But on this mortgage overview, it looks at the total amount of lending in the geography that you've selected over that 3-year period. On the left-hand side, it shows that 41% of those loans were home purchase loans. And if you hover, it pops up to give you a little bit more detail. The interesting thing is on the right, looking at year over year, how many loans were coming in. So for example, 52% of the loans in 2018 were home purchase loans. It gives you the exact numbers. And then each year you can see it increased slightly, 4% more loans and then 8% more loans in 2020. Refinance lending looks a little different. And this is a pattern that we see nationally. It's due to extremely low interest rates during 2020 and a massive number of refinances were processed during that year. So yeah, it does, it certainly does change.
So Jason, if I
Yes.
wanted to find out within these groups, the high cost loans, would I be able to look to see who's doing more of those HOPA loans? Or
Yes, so not directly. So this really is more of a market-wide overview. It looks at the top lenders, but it doesn't get into a huge amount of detail. But that information is absolutely something that we can pull together for you. Or it might be, I think that that's probably something that we might want to add to this tool at a later time. So we're always working on revisions to this, and that's certainly at the top of the list. So what Rashmi's talking about was an indicator on loan records called the HOPA, HOEPA, and I don't remember what it stands for. I don't know, Rashmi.
Homeowners Equity Protection Act.
Awesome. That is still in the data, but now we have access to specific interest rate information and rate spread. So we can actually tell very precisely what people are charging for interest and closing fees and things like that. And I think I need to, there's one screen that we touch on it when we talk about government lending. And let me see here. So this is, we look at interest rates and closing costs here on the loan interest rates and closing cost page. And it gives you quite a bit there. And we've done a little bit of extra math here in the pop-ups that I'll mention. For FHA loans, HMDA includes a detail of how much the borrower pays for an origination charge, how much they pay for discount points, or how much lender credit they get. But there is an amount of money that is not included in the, that's not, we get the total amount they pay, and then we get those individual parts of those charges. And there's a gap between those two figures that are referred to here as other fees. And other fees refer to a lot of things. Anything that you pay as a borrower at the closing table, like a credit check fee or inspection fees, a mortgage insurance premium upfront fee is included in that cost as well. So you'll note FHA here, the median figure for other fees was $5,244. Most of that is probably going to be that mortgage insurance premium, because if you look at conventional loans, other fees are a much smaller part of it. We're doing some educated guessing there, but I think that I think it's a pretty safe bet. We also do look at the closing cost and interest rates on here when we look at the share of government lending, because the closing costs in particular are so much higher, but we do not look at it on a per lender basis. But that might be a good idea for a future version of it. Oh, wow, there's a bunch of questions here. Dexter's asking, is the data breakdown the types of mortgages 30 years versus ARM made by race? No, the data will support that. This tool does not. So the vast majority, or I'd say the majority of loans are going to be 30-year fixed rate loans, but the current versions of HMDA do indicate if it is adjustable rate. In addition, we can also take a look at exotic features. Is it an interest-only loan? Is there a balloon payment at the end? A lot of these are really rare today because we're talking about a QM lending environment, so they wouldn't qualify, but they are present in the data if we want to take a look at it. Oh, let me see here. Wally is asking another question. Can we use a disparity ratio to compare a set of peers based on app? Yeah, Wally keeps asking really good questions that this tool hasn't evolved enough to do. Excuse me. Yes, the data will support comparing sets of peers based on application volume inside, target and comparable track areas. Well, you go ahead and shoot me an email and we can talk about it. Our team can certainly pull things together like this for you, but we would just need to understand a little bit more first. All right, let me go ahead and stop sharing here. And I'm going to put out a last call for questions because we're getting off a little bit there. Oh, there were some questions in the chat too. So Rashmi, Ken, I know you guys just started using it. I think the tool, you really just started using it this week. What kind of learning curve is there for it? Were you able to understand how to use it pretty quickly? You're both pretty competent with data, right?
Yes, the tool is very, very easy. Drop downs, there are explanations, the definition section that you pointed out. And it's not that Ken and I are newbies to CRA, so it was easy for us to find. One of the things that the reason I asked that question about high cost loans, that we don't settle looking at this data and saying Bank A is doing beautifully in our communities with large loans, but they are toxic loans. We need to get through and understand that data. So if I did something and I found, oh, Bank A is doing wonderful in my community, but Jason, could you look deeper, peel the onions and let me know, is it true? You'll be able to help, right?
Yeah, absolutely. One of the reasons we built this tool is because as our membership grew, I couldn't support everybody with custom requests. And I was getting 90% of the questions I got from most members were relatively similar. So I tried to build a tool here that answered those 90% of questions. But think of this as an introduction. If you can use this tool to gather some intel and it sets you up for your meeting, then that's great. If you can use this tool to gather some intel and it raises further questions, talk to me and I'm happy to take a look at it and see if we can give you a better answer. Rashmi mentioned the definitions button, and for folks that joined late, I just wanted to point out there's a lot of questions about the data, the methods, or the definitions of some of the terms we use. If you are on the lending tool, you look at the button that says definitions above it here and click on that. It opens this handy side window and you can scroll down and there's some basic information on how we determined certain things and what the data sources are. If you don't find your question answered there, click on the contact us link here or just shoot me an email and ask away and we can figure out an answer for you.
I can also real quick add that pre-access to this tool, my source was ffiec.gov, and it was quite painful to get data at the census tract level or at the county level. Institution by institution, print a whole bunch of them, stare at them, compare, and very time and paper intensive. This tool replaces all of that. So it makes my job easier and I am less of a pain to you, but it's a win-win.
Okay, I don't recall Rashmi ever being a pain to anybody. So let's just put that out there. But no, well, I'm very happy with your response, and I'm happy that you guys have found it useful. That's one of my primary goals here is to produce useful data analysis for the membership. With that, we are at 2:52. We've got a few minutes here. Let me see. I was just looking to make sure there are any other questions I can answer really quickly. I don't think so.
I think there were a lot of questions and interest about how do I become a member?
Yeah, and that's great because I've got Maggie on the call here. I'm going to ask Maggie to come online here with our membership team, and she's going to talk a little bit about the other benefits of membership. And she's the one who contact with all questions about. I saw a question here about the Just Economy Club. I saw questions about membership. So with that, I'm going to turn it over to Maggie. Thanks.
Thanks, Jason. Thanks, Rashmi, Ken. We had a lot of questions about membership, so I just wanted to take a few minutes to go over how y'all can get access to lending tool. So as Jason mentioned, the tool is currently open to current NCRC members and Just Economy Club members. So NCRC membership is open to eligible organizations that qualify either as nonprofits, educational institutions, or local or state government level agencies. So if you fit any of those categories, your organization can sign up based on what type of organization you are and how large your annual budget is. So a quick overview, and you can find more information at our website. If you go to ncrc.org, click membership near the top, all the information is there for your viewing. I'll drop the link right here as well, so you can just click that and get to it. So pricing, if you're a small nonprofit, which is under $500,000 in annual budget, it's $175 per year. If you're between $500,000 and $1 million in budget, it's $350 per year. And then if you're a large organization that has an annual budget of over $1 million, you would be at $900 a year. And there you can sign up as many team members, as many staff members as you want, and they'll all have accounts they can log into our member hub, which is what we call the little space behind the paywall for members. And that's where the Fair Lending tool can be found. So if you're already a member, all you have to do is go to ncrc.org, hover over membership, click the member hub, sign in, and then you'll be able to access the Fair Lending tool that Jason just showed off today. If you're wondering if you're already a member, you can reach out to me at membership at ncrc.org, and I'll type that in here as well so y'all have that. Or you can give me a call at 202-464-2712. If you leave a message, I'll get back to you as soon as I can. And then if you are not part of an eligible organization, you can join as an individual at the Just Economy Club. And I'll drop the link to that as well. And you can make a donation of your choice to join the Just Economy Club. Club members also have access to the Fair Lending tool, but there are a lot of other benefits to organizational membership that club members will not have access to. But if you do join the club, you will be able to use this tool that Jason just showed off today. So again, ncrc.org/membership. You can sign up there, see what the pricing tiers are. And if you are interested in talking to me about whether you're already a member, how to join and add staff members to your current existing membership, you can email me at membership@ncrc.org. And then also, if you're interested in paying via check or an ACH bank transfer, you can also reach out to me at membership@ncrc.org. I'm happy to walk through other benefits as well when you do reach out to me. So looking forward to seeing a bunch of new people using the tools. And I'll give it right back to Jason now to wrap up. Thanks.
Thanks, Maggie. So I want to, one more time, I want to thank Maggie. I want to thank Ken. I want to thank Rashmi. They've been incredibly helpful. If anybody has any questions, I put my email address again in the chat. It's jrichardson@ncrc.org. And there will be a recording of this call that we send out to participants probably within a day or two, you know, how that works with Zoom. Any other questions, please let me know. With that, I'll give you back your 3 minutes and you have a wonderful day. Thanks.